I'm going to be discussing a few topics with you guys regarding habits and stuff that people do, things you can do also then to improve your trading. Okay, so I really want to ask you guys, if you have any questions, feel free to ask them. We've got the chats open. Please interact. If you hang around a bit at the end of the video, we're going to have a promo code for you guys. It's a good one today. So without any further ado, I'm going to open up the charts and we're going to have a look. We're going to keep an eye on them while we're talking. But we're not going to be too focused on charts today. But let's switch there. Okay, there we go. So I've been working with quite a few people. I've worked with quite a few people in the past. And one of the absolutely critical mistakes that I see people make is not having a clearly defined trading strategy. So what do we mean by clearly defined? We cannot say buy high, sell high, buy low, for example. It's super unclear. But if you guys watched the previous video where I explained divergence, clearly defined will be the highs and lows, and also entry conditions. Entry conditions will be for me on divergence, for example, is when my stochastic crosses to the below and the divergence is concluded. We don't jump before that. As an example, we could say, let's say you want to use the RSI as a trading strategy. Please, this is just an example. I wouldn't recommend using this by itself ever, but let's say we're using that. And I'm not going to say, all right, I'm just going to take a, oh, sorry, I had some feedback there. I'm not going to say that I'm going to take a trade when the RSI goes up. That's undefined. That's not clear. What I need is specifics. Am I going to take a trade when the RSI crosses above 50? Am I going to take a buy trade? If it crosses below, am I going to take a sell trade? Am I going to take a buy trade when it crosses the 70 level or not? You need to have a very, very clearly laid out strategy. You need to have very specific conditions. Another important thing as well concerning the strategy is that you need to know what your indicators are showing you. Okay, so a lot of people I've spoken to in the past, they would use the stochastic, for example. Now, the stochastic shows you a couple of things, but a lot of people don't realize that the stochastic was actually designed as a continuation indicator, not a reversal. So an example that a lot of new people make is they will go for the stochastic is at the bottom, it's way below 20, so it's oversold, I'm going to buy. Whereas the way it was designed is that would give you a sell signal. It's a continuation signal rather than a reversal signal. So yeah, you need to understand, go read up if you want to use the RSI, for example, if you want to use the stochastic, you want to use the ADX, whatever it is that you are using to build your own strategy, you need to go and have a look at exactly what that is telling you. So yeah, understanding what your indicators are actually showing you is very, very important. Okay, so we covered trading strategy, clearly defined, and understanding what you are using to build your strategy. So you need to understand what indicators you are using, how they work, what they are showing you exactly. Okay. Another thing that a lot of people struggle with is emotions. We are all humans. We get worked up. Sometimes our day is going badly. Sometimes we feel absolutely great on top of the world. And this emotional roller coaster will influence your trading in ways that you might not understand. It's the impact on your emotional impact on your trading is tremendous. It's absolutely tremendous, and it's something that a lot of people neglect. How do we deal with this? There's a lot of ways to get in control of your own emotions. For example, me personally, I started using, what's it called? I don't really want to plug the app here. Mindfulness, right? So for me, it's just early every morning, I just go sit outside by myself and I relax and just be in the moment. This helps me personally. There's other stuff you can research it. There's a lot of ways, but it's really, really important to be aware of how you are feeling when you are trading. If you are in a bad mood, again, I can tell from experience, from my own experience, that when I'm in a bad mood, my trades go badly. I make bad decisions, and it almost always results in losses. So if you're really having a bad day, walk away. Just walk away for a bit. Don't force it. Right. So yes, we're going to say trade when you're calm. Don't trade when you're upset. Okay. We got some guys in the chats speaking in, I think it's Arabic. I cannot read that. So if you're asking something, if you guys don't mind doing it in English, I'd be happy to if you're asking something to answer, but I can't read that. And how to success the market from $1? Yeah, I don't know if that's possible though. Maybe, but I doubt it. Okay. So we do not have anything on the charts at the moment. No entries in the near future, it seems. Let's continue. Okay, so another thing that a lot of people seem to miss is the fact that the market has cycles. The market is dynamic, and this is where I like to tell my fishing story. I can go to a river, the dam, the sea, wherever I like to fish. I can go at any time of the day. I can go during the week, I can go on weekends, whenever. I can, it's available for me 24/7, just like the market is. The thing though is that if I am at the river, dam, sea, 24/7, what's going to happen is that I'm going to start noticing that I'm not catching the same amount of fish every day. I'm not catching the same amount of fish at the same time or at the same time every day. Today, a lure will work very well, and tomorrow I won't get a bite on it. And this is the same with trading. Trading is exactly like this. The market cycles, and anybody that's been trading for longer than a day will know that your strategy is working beautifully right now. And tomorrow you come back and it doesn't work at all. So what's happening? Excuse me. The market is dynamic, and the conditions for your specific strategy will never be constant. It will never always be perfect for whatever strategy you are using. It will never be constant. Instead, what we have to do is when we go and sit down to trade, we have to just spend a little bit of time watching the market. See if your strategy is working. Before I dive in, I just sit and watch for a bit and see how's the market behaving. Is it something is it the moves that it's making going to benefit me, or is it something that I should stay away? If the market conditions for your strategy is not good, walk away. Take a break. Go make some coffee, come back in an hour's time. I do understand that a lot of people trade after work, but that's just going to be forcing trades. You cannot, if the market conditions for your strat is not good, you cannot force your trades. It will result in unoptimal results. Good strategy, how to trade confidently. Stick around with me. Stick around, Aminur. We're getting to that. We're getting to that. Lydia asking if I trade OTC pairs. Yes, I do. Sometimes. I'm not a big fan of it, but I do sometimes trade OTC pairs as well. Okay, so we're on cycles. So the market is cycling. And you need, as a trader, to sit, watch a bit, and identify if this is a good time for you to trade, or if it's a good time for your strategy. Okay. The fact that the market cycles and people don't realize this leads to another phenomenon that we call the circle of doom. I've heard it called the cycle of death. Lots of names for this out there, but what happens is that you will give somebody a strategy, or you will get a strategy, and you will test it on the market. And it's working beautifully. Beautifully. You're winning trades. Good win rate, it's working. Tomorrow you sit down and you're using that exact same strategy, but it's not performing as well as it did yesterday, which is expected. But people don't realize this is going to happen. So my strategy is not working today. Yesterday it worked beautifully. What do? I start tweaking my strategy to fit the current market conditions. And then I've tweaked it and I get a few trades. Tomorrow I come back and this tweaked strategy that I've made is suddenly not working. What do? Go do some adjustments. So what happens is that traders keep adjusting the strategies. They keep adjusting it and they keep trying to catch up to the market. And you will forever be adjusting that strategy, which is not ideal. Instead, I have a strategy, it's working, I sit down and I see that my strategy is working well and I'm trading it. If tomorrow my strategy is not working well, I simply don't use it. I don't change it because I know it's a proven strategy that I'm using. This is also the reason why I have more than one core strategy that I use when I'm trading. Because today one of them will work great, beautifully, and the other one will perform very poorly. And I need to identify which one is working, which one is not working, what's performing poorly, what's performing great, and I stick to the stuff that's performing great. It's never the same. It's also, unfortunately, especially for people that's working, they've only got a limited time, and that makes it much more difficult because they've only got an hour or 2 or 3 maybe in the evenings, and they're trying to fit their trades into there, and they don't want to take the time to just sit and watch the market instead of sit and watch and not trade for a bit. Instead, they just want to jump in and they want to go because they've got limited time, and it's the wrong approach completely. You need to take your time. You need to be calm, no rush, and just sit and enjoy. So, to recap market cycles, whatever strategy it is you're using will work beautifully for certain periods. And I used the daily example, but the market cycles on all time frames. Okay, so it cycles hour to hour and day to day, week to week, month to month. You'll have stretches. It's when I use the example per day, but it shouldn't be taken as only per day. Sometimes a strategy will not work for a week. Sometimes it will not work for a month. Doesn't happen too often, but it does happen. So identify your trades, your time to trade. When I started trading, like it was a little over 20 years ago, somebody once told me, not trading is part of trading. And it took me a while to understand that there's times that I shouldn't be trading. I'd rather sit on my hands than lose money. So be patient, watch the cycles, and try to determine, is the market conditions good for your whatever strategy you are using. You're asking a lot of questions, and I'm not going to be able to cover in this video. Most of those. I would suggest you go watch some of the past videos in the past month or so. There's been some good videos explaining quite a few things. Maybe go do that, and see what is, you'll definitely learn something if you go through them. Okay, we covered having a defined trading system, a properly clear defined trading system. We covered emotions, and we covered market cycles. The next thing that I want to talk to you guys about is something that most people absolutely do not want to do, because it feels like homework. But this is keeping record of your trades. Every single trade you take, you need to write down, keep record of. I can show you I am able to show somebody trades that I've done 5 years ago, even if it's 1 minute trades. I made myself a spreadsheet, and I keep track of it. It shows it. Excel is so easy to use these days. Make a spreadsheet, enter your trades that you do every day. If you can't do it, get somebody to help you, maybe. Work out what's your average win ratio per day, every day. What's your monthly win ratio? All those kinds of stats. It's really super important, because if you don't keep track of your trades, you don't know when you're performing badly, and that's the main reason. It's really important, because you want to know if you're performing badly. Trading should be seen as a business. It's your own business. And what does a business do? Business is, if I have a company that sells stuff, I am going to keep track of what I'm selling. And I'm going to keep track of how much of everything I'm selling. So at the end of the month, or at the end of the quarter, I can go and look. I'm selling 100 things, and 10 of those things were selling in large quantities, and another 10 of those didn't sell at all. So what am I going to do? I'm going to make sure that I keep my stock levels of the things that sell really well. I'm going to keep them high, and the stuff that doesn't sell, I'm going to stop selling it. And in this business, in your trading business, your strategy is your stock, if that makes sense. So you need to know what's performing well and what's performing poorly. Okay, so if you're running a strategy, and 6 months down the line, you go and you look at your average returns using that specific strategy. If it's bad, stop using it. If it's good, great stuff. Keep using it. You can't do it just for a day or two, unfortunately. This needs to be spread out, and this is why you have to keep track of your trades. You have to see what's going on. Another way that's important too is when we spoke about emotions, right? Leave a space. It's going to sound silly, but leave a space to before you start trading, where if you have a spot where you say, okay, I'm starting this much, closing with this closing balance, this is how much profit I made or loss that I made, all that stuff. Just before that, leave a space to say, this is how I'm feeling today. I feel good. I feel anxious. I feel unhappy. Whatever you are feeling, write it down before you start trading, and you will and see if you can identify a pattern. And I can promise you, you will see that the days that you are not feeling well, you're not going to perform well. So it's really, really important to keep track of your trades. Spreadsheets makes it so easy. It's really simple. Okay. It's really simple to do. You don't need to be overly complicated, but keep track of your trades. You need to know how you are performing over time. It's super, super important. Do we have any trades? None whatsoever. Would like to do a trade or two as well while we're talking. I've got one more topic we're going to cover or discuss. Let's see. No. We have a data release in about 30, in about 9 minutes. We're going to see some big market movement though. But let's wait for that. Okay. The last topic that I'd like to discuss today is risk. And risk is something that it seems that a lot of people don't quite understand what risk is, what we mean with risk when we're trading. Risk is not only your trade size, the size that you decide the size of your trades that you're taking is not the only risk that you have when you are trading. Although it's very important, trade size, I usually recommend 1 to 2% of the balance. For me, that's a safe cushion. Okay, so it allows for things to go a bit wrong without hurting too much. But it definitely has to be something responsible, something that you can actually handle. But the other thing with risk is strategy related, that we cannot. It doesn't help if I'm trading small trade sizes. If I keep my financial risk small, but I keep my strategy risk high. That's what you say. That doesn't correlate. You need to keep both of them low, your risk low, and the strategy risk, the trading risk, is going to be tied into your trading strategy, which we discussed a bit earlier. Martingale, I get goosebumps when I see people do martingale. Goosebumps in a bad way. A lot of people don't understand the idea of martingale, and a lot of people will take a 1 minute buy, and that trade loses, and they will double it because they want to take a put, and they will double down on a wrong trade, on a loss, and you don't want to double down on losses. Let me explain to you guys quickly how martingale is actually supposed to work. I don't have anything against martingale in itself. It's usable. The problem with martingale, or the problem that most people use martingale as, is doubling down on losing trades. So let me show you guys, and this is just an example. Please, this is not a trading strategy that I'm going to show you, but this is going to be a simple example that I will be able to show really quickly. If I were to say, okay, I am trading when I'm selling when the stochastic is above 80, and I'm going to buy when the stochastic is below 20. And I say that's my strategy. Please, again, this is not a strategy suggestion. I'm just, for the sake of example, for martingale here. So if this right here, I would have taken a sell, and it would have, and there's a sell because that was an entry. If this trade loses, I do not take another trade. Instead, I'm going to wait for my next strategy signal, and then you can martingale. So let's say You sold, you bought here, your trade lost. Then your trade comes, stochastic comes up to here, it's above, so I'm going to sell. In this case, it would have lost again. And this is the reason why, please don't use this as a strategy. I'm just using this as an example. So the next trade, I would have maybe, I would have bought again. And that would have been bigger. Then that's your martingale. Martingale is, especially, I see this a lot of time when, Hunter, stick around. I'm going to give you that promo just now. In a minute. So martingale needs to happen at your strategy entries. So if your strategy gives you a buy signal, you take a buy. That trade loses, you don't immediately take another buy. And I see this so often with people trading 1 minute candles and 1 minute expiries. They keep doubling keep doubling down on losing trades. Whereas the correct way to use martingale is, I'm getting an entry on my strategy, I take the trade and I lose that trade. The next trade will be my martingale, but only if my strategy gives me an entry. I will martingale that entry. If that loses, again. But you don't double down on a losing trade, ever. Okay. Many traders will remain binary. Trading is gambling. It's not business. How to trade. I mean, here's the thing. Trading is a business, but it takes a while to understand. And it needs to be approached as such. I've seen many, I can't even begin to tell you how many people told me that I'm gambling in my life. But you can actually read, it's not, the market is not chaos, to quote Alex. I know he loves saying that, the market is not chaotic, and it's not. But you need to approach it in the correct way. It needs to be approached from a logical business point of view. If you get emotional and you just don't have if you don't have a clearly defined strategy and understand what that strategy is, you need to understand what the strategy is. So if you don't have a clear strategy and you don't have control over your emotions and you don't understand what you're doing and you think you can sit down every day at the same time, do 10 trades and you're going to get the same result every day, that's when people say it's impossible. We can't do it. It's impossible, because none of those things will ever be true. None of them. And we need to adapt to it. We need to understand what it is we're using to trade. This is some hidden bullish divergence. This is looking good. We might actually get a trade here. Some decent bullish divergence forming. What's the time? It is, oh, but the data is going to hit now. I'm not going to take this trade, but this should have been a buy. It's hidden bullish divergence. But we have a data release in a few seconds. This is one of the things that people need to understand as well. Keep an eye on data releases. Know that it's coming. The fact that I know that there's, I think it's unemployment figures data from the US is coming out today. I know it's going to happen in 30 seconds, 25 seconds. Keep an eye on it. It'll keep you out of bad trades. If I didn't know this, I would have taken a buy there, but it's too close to data, so I'm not going to take a trade here. Personally, I don't like trading news. It's too volatile for me. But we're going to see some big movement in 4 seconds. 3, 2, 1. There we go. Okay, so the data is out. Is it climbing? Is it sinking? What's it going to do? It's tanking. That means it's good for the dollar. Okay, so the data from the US was good. Either expected or better than expected. And yeah. Okay. Let's see. Guys, there's the promo code. Do it 70. Valid until 29 September. It's a really good one today. Make use of it. Any questions? Guys, is there any questions from the people that's watching? Chat, do you have anything? Anything I said that's unclear? Shall we do a recap quick? I think let's do a recap quick. Number one, you have to have a clearly defined trading system and understand that system. Whatever indicators you're using, understand what they are showing you. Read up, and if you have to read it 10 times to understand it, read it 10 times. But you need to understand what your indicators are showing you exactly, and you have to have an exact, clearly defined trading strategy. Number two, control those emotions. Do not trade if you're upset. If you get upset while you're trading, take a break. Have some coffee. Have a sandwich. Watch a show. Something. But get those emotions under control. Market cycles. Understand that your strategy will not work the same every day. Understand that it will not work the same every day at the same time. Some days it will work beautifully, some days it will not work. This is why I have more than one strategy personally that I use every day, because some days, some of my strategies do not perform well and others do. And if I am struggling, some days the market is just being nasty to me. Not necessarily to everybody, but to my strategies, it is. And those days, I go spend somewhere else. Not trading is just as important as trading. Knowing when not to trade. Keeping record of our trades. We have to keep a record to see how we are performing. And how our strategies are performing. We need to understand when are we trading well and when are we not trading well. Like I mentioned, just add a slot there for how you are feeling. See if it correlates. If you're having a bad day on your strategy, on your results, have a look at how you're feeling. Did that impact? But also it's important to keep track so you know what your strategy is doing over time. It's impossible to determine if a strategy is good or not in a week's time. But if you've been using the same strategy for 6 months and it's consistently giving you over 6 months, or even 3 months, consistently giving you bad returns, stop using it or figure out what's wrong with it. But don't adjust every single day because today it's not performing well. It's never a good idea to just every day adapt the strategy, because you're going to keep adapting that until the end of time. And lastly, risk. Manage risk. How to develop my psychology. I cannot control my emotions. Aminur, there's no way I can answer that for you, man. What you have to do, because all people are different, what works for me might not necessarily work for you. So what you'll have to do is do a bit of research. Go on YouTube or get some books, podcasts, anything that covers emotional control. There's a lot of stuff that I know people do. One of the things I can share with you, actually, that something that helps calm you down like almost immediately is what they call the double sigh. And this is actually a scientific thing. It's got there's a neurological reaction. I can't remember exactly how that works, but this is absolutely 100% scientific thing. It's I saw this from one of the world's leading neurologists. I was watching some of his stuff, and this was one of the things that he did, and it's called the double sigh, where you just go with your mouth. you take you breathe in and then you do it again, and then you release through your nose. Um, it feels a bit silly the first time you do it, but it's something like slowly out. That's actually proven to help calm you immediately. Has almost an immediate effect on a person's body. Most people, but anyway. But people are different. There's no way I can tell you this will work for you or this will not work or whatever. You'll have that's a journey of self-discovery that only you can take, unfortunately. Okay. Do you guys have any questions other than uh, on the topic that we discussed today? I'm sorry for leaning like this. My microphone handle is in the way of a little bit in the way of the comments. Are we all good? It seems that way. Oh, dude. I have no idea even what that is, man. I'm sorry. Grid opacity price level. I don't even understand. Those words don't make sense in that order to me. Okay, guys, we didn't do a lot of trading, but I think what we discussed today is almost more important than getting or reviewing a strategy or reviewing an indicator. This is some of the most important things. You do need to follow, not follow. These are things you need to do in order to be consistent in trading. There's no way about it. There's no two ways about it. You can't get around it. Trading is work. Trading is a lot of work. I cannot begin to tell you guys how many thousands of hours in my life I've backtested stuff that I was looking at, trying to develop some new stuff, things and what. It's literally thousands of hours. Literally thousands of hours. So yeah, it is a lot of work. Trading is not easy, but it's simple. Okay, guys, that's it from me then. Glad to have been here. Let's do that promo code again. Promo is do it 70, valid until 29 September. And yes, that's it from my side. I'll see you guys again. In the meantime, practice. If you find that you are lacking in one of these categories that we discussed, work on it a bit. And until then, I hope you guys sort it out. And see you next time. Until then, trade safe. Cheers.